If you're an AustralianSuper member, I've got good news. Despite a lot of global uncertainty, we've seen positive investment returns across all our investment options. The balanced option returned 9.8%, while high growth returned 11.6%, delivering strong performance for members over the financial year. While short-term results are important, so is long-term planning. Because for most of us, super is income for our future. Even if you've already retired, we're here to help you enjoy life now and live well throughout your retirement. "2026 has seen some big changes at AustralianSuper, but none bigger than saying farewell to our long-standing Chief Investment Officer, Mark Delaney. And while change is constant, continuity is also important. Our new Chief Investment Officer, Sean Manuel, has an impressive track record with the fund as our Head of Australian Equities for the past 13 years. I caught up with Sean to find out what drove our investment performance.
It's really been the continuation of the equity story. We've seen equity markets up very strongly over the last 12 months. Another good year. It's been surprising, but I think what was also surprising was that strength broadened out. Even though the United States was up 20% again, it underperformed other indices. So for example, emerging markets were up over 40%. So that breadth across markets was pleasing.
And listed equities was our best performing asset class. What was driving that?
Same theme, AI. It's been the theme for a number of years now, but it just continues to gather pace. If anything, it accelerated, and we've seen that with the recent IPO of SpaceX and some IPOs coming up later on in the year.
Sean, can you tell us a little bit more about the broadening of returns?
Certainly, and as we've touched on, it wasn't just the broadening of equities and sectors and countries. Other asset classes also benefited as well. So we run a diversified approach, and so it was pleasing to see strong performance in private credit and private equity as well.
And geopolitics has created great global uncertainty, which can be very concerning for our members. How are we looking at the geopolitics issues around the world at the moment?
The jump in oil prices has had a short-term sort of inflationary impact, but it's just added to this thematic of economic resilience. When it gets hindered, countries need to sit back and think about how do we sort of manage ourselves through those periods. We've effectively had deglobalization now for 10 years, and that's had a huge impact on the way we think about investing and on the broader economy as well.
And Sean, now you're in your new role as the Chief Investment Officer. What does success look like for you?
Very much a continuation of what the fund has been delivering since its existence, which is delivering for members and having a members first outlook. We sit here and the track record of the fund is an enviable one, and really it's about helping the broader investment team continue to deliver that sort of performance for members, not just in the short term, but increasingly thinking longer term as well.
So that's a bit of what we saw during the past financial year. But given the amount of uncertainty affecting global markets right now, our team is focused on what's ahead. When we look for investments with the ability to outperform, our team does a lot of research into the wider elements that impact markets. So I spoke with Guy Bruton, a senior member of our macroeconomic research team, to see what he thinks we could see in the future.
As the grey hairs in my beard show, it's a challenging exercise. We've been pretty laser focused on three key things. The first one is the US-Iran conflict and the spillover that's had to energy prices and supply chains. The big AI thematic, the capital spending, the disruption that's likely to come out of that. And then the third part is the prospects for, or the potential for, ongoing inflation.
You mentioned inflation. We often hear from members who are concerned about higher costs of living. What might it mean for interest rates?
It's been top of mind for us, clearly. A lot of central banks moving to hike rates. So those things are going to weigh on consumer spending, on housing, I think, in the near term. But one thing to keep in mind is that in the medium term, I think there are good reasons to be constructive. Part of that is around the tailwinds that come from capital spending. So there's a range of structural drivers in play, from the need for infrastructure renewal to fund the energy transition, the AI build-out, which has got quite a ways to run. And importantly, that opens up the prospect for an improvement in productivity growth, something that's been a missing factor in many economies over the last decade.
We're always keen to share more with you about our investment performance and outlook. So if you'd like to learn more, Join us for our next investment webinar on the 7th of August. You can find the details and register via our website.